Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hey, guys, it's Phil Tarrant, host of the Smart Property Investment Show. I hope you're well, wherever you're tuning into this, dialing in, watching us on the YouTube, and all over the place. There's lots happening. It's all very exciting, but we're going to do a bit of a short episode today. I sometimes pivot between quite large, long podcasts and then short, concise, sharp ones. And today's going to be very short, sharp, and concise, because that's how I like to talk about money quickly. It's that time when a couple of times a month we get together and talk mortgages, and we all know mortgages is very much the nervous system of most property investors' ability to continue to create wealth through property, and you're only as good as the finance that you can secure, unless you're one of those handful of people that I know who will pay cash for everything, but that's not most of us. So we typically have to speak to the bank, the lenders, to actually get dough so we can continue to invest correctly, right, etc., which I bring in experts to talk about. One of them is Eva Loisance from Finni Mortgages.
Hello.
Back in the studio.
Yeah. Talk SMSF.
We're going to talk SMSF today. So for those that don't know or have been living under the rock, there's a thing called a self-managed super fund, which means that rather than you giving your money to a retail or an industry fund like Oz Super, for example, who manage your superannuation for you by putting that money into assets and they provide a return on it. A self-managed super fund is pretty much the same thing, except you do it yourself. You own the fund, you control the fund, you're in charge of the compliance of that fund, and you determine and direct where that fund chooses to channel its capital for a return. So same but different. Growing in popularity, self-managed super funds, particularly within property ownership, because a lot of property investors get to a point where the bank says no more money for you because your serviceability is capped. Often the next cab off the rank for those ambitious investors is to start investing in their self-managed super fund. So we're going to get it really quickly over the next sort of 15 minutes or so. Eva, explain an SMSF for me.
Yeah, that's exactly what you said.
That's it.
It's just a way to control your super. So you get control back, you get leverage, you get so much. So that's really, as you said, something that people started to look at in the last 5 years. It's just grown so much. And I think because of the restriction around borrowing capacity, where people get stuck, they can't borrow anymore. They've got that cash sitting there doing, whatever share markets are doing, and no leverage.
Well, I was looking at my share portfolio inside of my super fund just yesterday.
Yes, that would hurt.
Probably not performing very
No, that would hurt. Don't look at it.
So recording this at the point in time when the new president of America is putting a lot of tariffs in place, and it's really hitting the share market pretty hard. But, shares go up or down, left or right. But I do feel as though that my money would be better parked in property. So I'm going to force myself to keep it inside of shares. Maybe I should just buy something else like gold or silver, maybe. Who knows? That would not be advice at all to anyone out there. You've got to speak to your accountant and financial planners around this. So this is the idea, and I said that you're in charge of the compliance, you're in charge of the asset selections, you're in charge of everything to do with it, and there is a regulatory regime around supers that can be restrictive sometimes and all this sort of stuff. Is it really that hard as everyone thinks it is to, number one, start, and number two, manage?
Yes, so that's a whole, cliche around it, that it's so hard, it takes so much time, it costs so much money. I've just gone through myself. I've just set up my own SMSF. It took probably 2 days with my accountant to choose a name, set it up, pay for the fee, done. Trust was there.
Have you got the bank account set up yet?
Yeah, bank account second. Well, that takes an hour at the bank.
Yeah.
That's pretty slow.
And there's only some banks will actually do it, right?
There's only a few.
Who'd you bank with?
I went with Westpac because I've got a few loans there. It was easy, but it's not as complex as it sounds, as long as you get your good team. And again, it's always the team, a good accountant that don't pretend it would take 3 months to set up a trust, which some do.
Okay, because they're lazy?
I don't know.
Yeah.
I guess
to be fair, it can be a little... The thing is that if you're reasonably financially literate, it's not really that hard.
But
if it's a completely new concept to you.
You don't really have to do anything, right? You just go to your accountant and financial planner. I want to set up an SMSF. They order it for you. You don't have to do anything.
But when people go, but you've got a custodian, there's a trustee, there's
Correct.
the thing that there's all these different bits of it,
Yeah.
which
It's
can
four.
confuse
It's
people.
4. If you can count to 4, you'll be fine.
What are the 4?
So you've got your SMSF, your SMSF trustee. And if you do want to borrow money to buy the property, which most people would, you've got a bare trust and a bare trustee.
Yeah,
That's it.
yeah. And
4.
every property needs its own bare trust and bare trustee,
Bare trust.
whereas the custodian and the
Custodian is the same as bare.
as the bare trust.
Yeah, so the SMSF and the SMSF trustee will always remain the same,
Yeah,
but you will need a new bare trust every time you buy
that's
a property.
right. Yeah, okay.
Custodian trust.
Yeah, it's funny.
4.
Anyway,
The 4.
You should be able to work it out. You should be able to work it out. It's
Yeah.
not that hard. You'll be able to work it out. And
Yeah, we can provide some drawings and that. It's quite simple once you know how it works and why things work
I
that
need
way.
drawings in crayons.
Yes.
Normally I sit
Yes,
there and
a lot of people like to have this is the house, this is the loan, that's how it works.
I need to do it. I need to understand it that way.
Yeah.
It can be done if you've got a good accountant. They should be able to sort it all out
Quite quickly,
And
yeah.
even on the compliance administration side, talk about you've got to get audited, right? You need to audit. It needs to be lodged, everything like that.
But you're not the one doing it.
You're not
Your
doing
accountant
it.
is doing
You
it.
cannot have a
Yeah.
external auditor that they use to do it.
Yeah.
Another thing that I find slightly complicated with it, and again, it's not complicated because I'm very conditioned for it, but when you get to a point, if you're generating a certain amount of income in your SMSF, you also need to start doing BAS statements on it as well, because you need to be registered for GST because if you're generating money.
But not you, your accountant.
The accountant does it all. So,
Yes.
so like, if you're a PAYG employee, you've never done a BAS before, that's your business activity statement. You've got to start doing that stuff as well if you're generating a fair bit of money. So anyway, I don't want to overcook that.
I guess for the basic moment that people that would just buy their first property in SMSF, it can be quite simple.
It can be quite simple. It's Eva Loisance from Finni Mortgages. You can touch base with these guys. Get in touch if you want to talk anything about we're talking today around SMSFs or borrowing in general. Finni.com.au, finni.com.au. What are the benefits of purchasing property through a self-managed super fund?
I guess the main one is leverage, right? So you can borrow up to 90% these days. The sweet spot's 80 to get also good rate and fees, but up to 90%. So, if you've got like 150K in your super, you can buy a property for probably 600, 650. The return can be a lot better than in shares at the moment anyway.
So essentially you're leveraging up the debt.
Leverage.
So-
The leverage is the main reason why people would go
And
for
this
it.
is assuming that you buy good stuff.
Well,
You're putting a dud property in your super fund, still a dud property. And this is a really important point. This is not like some super way of investing. It's just the basics around buying property is largely the same if you're in super or outside of super. The only difference is that your strategy or some of the tactics you use may change because you don't buy properties to do big major renovations on inside of your super fund, for example.
that's right.
'cause you can't.
There's big differences there. You can't do major changes. You can't get equity out of the property ever again. So that limits how quickly you can grow into...
You can refinance.
You can refinance, but dollar for dollar. You can't access equity.
You can't access equity.
No.
Yeah.
So the next property would have to be bought through new super cash that you've accumulated over the years.
So you can't refinance a
And
property that's gone up in value in your super fund, use that equity to
No.
buy another property
No.
with more value inside
No.
your super fund. Really?
No.
So the debt is only ever, so the debt
The
you start
debt's
with is the
ever-
biggest the debt. So it
Yeah,
doesn't
that's why
matter-
people start, like 80 or 90 because obviously they keep as much cash as possible in there to go again as quickly as possible.
Okay, see, this is it, right? So you can't do all the tactical stuff of extracting equity. and
No,
doing it, yeah.
no.
Yeah. Yeah.
So
and-
it's limiting in some ways, right? But the leverage you can start with is huge. Obviously, the less tax in there. If you sell the property once you are in the pension phase, there's no capital gain tax.
So the
It's
only
huge.
way you can get money into your super fund for the purpose of buying property and or any other assets is
rolling over
sort
the
of
funds.
concessional
Yeah.
contributions or
Contribution.
additional contributions. That's the only way that
That's
goes
it.
in.
Yeah.
You can't do
Cash
it through
input.
manufacturing dough and keeping it inside of it.
No.
Yeah.
No.
It's a bit boring.
You can't
isn't
even
it?
do construction in SMSF. So
Well, you can't even do improvements, right? It's only got to be like for like, right?
Yeah, that's right.
Which means you've got to be really
Repairs.
specific about what you buy inside
Yeah.
of your super fund. So, and this is all questions for your accountant. So how long does it really take to set up? You said about
well, look,
2-3
my
days.
accountant, and again, I'm happy to share those.
Do you have a good accountant?
I've got a good accountant for SMSF. It was really quick. I'm happy to share his details. Then it took me time to go to the bank and sat there for an hour, like with someone typing everything in. And then they initiate the rollover, which is moving the funds from your retail or industry super fund into the actual cash management accounts I've set up. And then you're ready.
Okay.
So really in time, it probably took me 3 hours.
Okay. It's
That's
not too
it.
bad. But you haven't bought anything yet. You're going to buy something. You're going to buy a property.
Ready.
Yeah.
I'm ready.
Have you got a loan sorted out?
I've got loan sorted out.
Did you use Finni?
I use Finni.
You do it yourself?
I use the Eva Loisance. She's pretty good. And then I just signed up with a buyer's agent and off we go.
Using a buyer's agent. Well, oh, God, this is all the shortcuts. So,
The shortcut. Good shortcut.
shortcuts is handy, right? So it's nice
Shortcut
to know
to success.
when you know. Yeah. But the thing is, all these shortcuts are available to everyone. Like, and I talk about it on this podcast all the time. Like, just get really good people to help you out with this stuff. You know, and they can hold you accountable for speed. But I want to do this. Okay, I've done it. You go next.
Look, I know money. I don't know properly. I just go and get a buyer's agent to do it.
Yeah. Okay. So, how much you really need to get going? If you
Yeah,
want to
good
buy
question.
property?
So some financial planners would still say we need 250. Some would still say you need 200. Actually, you don't have any more limits to it. So obviously, it starts being hard if you've got less than 150. But really, you could have 50K in there and just buy a very small unit somewhere.
Yeah. Okay.
There's no minimum required anymore.
So you probably want some advice around that because
You want
once
some
you put
advice.
your money in and start buying stuff again, there's limitations with
There's
how you
cost
do
to
it.
setting it up. So most financial planner would say you need 200 to make it.
Yeah.
But I'm doing everyday loans for people that don't have 200,000.
Okay. Good. Now, there's been a mixed bag of history when it comes to SMSFs in Australia, and I want to touch on that. We'll just go to another break. Stay with us. Now, SMSFs, if I think back maybe 20 years ago, when it was a relatively new thing for people to buy property in self-managed super funds,
It was hard.
quite a few, let's say, less than scrupulous characters around there trying to sort of, inverted commas, peddle this idea of buying property in super, and some of them are doing the wrong things, and I think some of them went to jail, and other people probably got caught up and swept up and stuff and got stuck in properties which were problematic and non-compliant, and all that sort of stuff. It's largely matured a lot now. Self-managed super funds, particularly buying property inside a self-managed super fund. There was a period of time when a lot of lenders liked SMSF. Then there was a period of time when lenders really didn't like it. And there was only a handful of lenders who were providing loans for self-managed resi property and self-managed super, and rates were
Atrocious.
crazy, right? But that's sort of reset a fair bit, yeah?
Yeah. So the major bank like Macquarie, St. George that used to do SMSF, they're still not in the market. So they're actually not, there's no bank doing SMSF.
Yeah.
They were like your second and third tier lender.
Why don't banks do it? They just,
Well, apparently AMP is coming back to it. So
newsflash.
newsflash.
There you go.
So we'll see. That could be a start of something.
Yeah.
Yeah. But there's more and more. Like a few years ago, we were dealing with like 3 main lenders. Now we've got 10 to choose from with very different rates, very different product, very different policies, and making it easier and easier and easier to
So how
get
different are the
access to it.
policies for self-managed super lending versus out of super? Is it, do you still have the same flexibility and sort of more pragmatic approach, or a lot more restrictive?
It used to be very restrictive. Like it's 70%. You need 2 years contribution history. You need 200K minimum. You need your liquidity at the end. That's all out of the window. Now you get people self-employed. They've never contributed. Just a letter saying, yeah, they could if they want to. Done.
Is that all? So people who have never, like self-employed people, never pay themselves super, can still set up a self-managed super fund and fill it full of money, which will have some tax consequences.
Yeah, obviously
probably
if they've got funds in there and they've got the accountant backing that they could make the contribution, they can afford to make the contribution.
Yeah. So it's been a bit more pragmatic now.
No, it's
So it's just,
without any evidence that it's happened in the past or obligation that it will happen in the future.
I imagine
So
that will probably change the rates you get, right? Maybe?
not so much, no.
No?
No, so it's almost like a low doc, self-employed
okay.
SMSF loan. Yeah.
Okay. And what about refinancing inside a super fund? So you're not refinanced for the purpose of extracting equity,
Yeah, for
which
rates,
is what
really.
which is what you would do. So
This is purely
so
for
if you,
rates.
so if you invest at 80% or 90%, LVR, so you're only putting 10 or 20% of your own dough in there, and then it probably goes up in value, you can refinance it out, and therefore probably you won't be paying a bigger premium on interest rate. You'll get a sharper interest rate.
Yes, that's the main.
So that's really the main reason.
That's the main
for
reason. Yeah,
refinancing.
getting into a lower LVR brackets to get better rate. Also, people that are stuck into those major bank, St. George, Liberty, La Trobe, Macquarie, and
On
been there for
old historic
yeah,
SMSF
also,
stuff.
they're like on 8-9%.
Yeah.
Right. When we could move them to lenders now that are like on probably low sevens,
You get low
even
sevens.
6, yeah, if they've got low LVR.
Resi and commercial, just
Yeah.
really. So what's a low LVR, like 40%, 50% or
50,
lower?
yeah. 50 would be.
So if you're sub 50,
But
you should be
most
getting
people
sharp
that had
rates.
properties for the last 10 years, they would be there, right?
Yeah.
So there's huge potential there to refinance. Doesn't really cost more than any other refinance outside of super.
So you're pretty much just saving saving interest.
Yeah.
Keep more of your money, or you can deploy
We could be reset the interest only period. It could be getting an offset if your accountant agrees with that, because that's a very hot topic.
Can you offset in self-managed
Well,
super fund? Because normally they
yes.
didn't allow it,
Yeah,
right?
well, that's it. Some people say yes, some people say no. Some lenders do have an offset, some lenders don't.
That's a big deal, right?
It is.
Because most people are P&I inside of a super fund, correct?
Yeah.
They only do P&I in super
No,
fund?
they do interest only.
They do
as well.
interest only. Yeah, again, don't want to be providing advice, but say you're P&I in your super fund, that means you've got a fixed amount that you're going to be paying
Yeah,
for whatever. Get a sharper rate, you keep paying it the same amount, you drive the principal down faster, get it paid off quicker, but the offset though means that most super funds, there will be some advice somewhere which would say you need a certain allocation towards cash. You keep the cash, you offset your interest, right? Pay off your debt faster. Again, this is all the technical stuff you can do.
But there are a lot of accountant or financial planner that are saying that's a no.
Oh, they're saying you can't do it.
You can't, yeah.
So it's not compliant.
Not compliant.
Offsetting your.
Yeah.
Yeah, God, this is it. So you got to make sure you get the right. What do
that's
you
a
believe?
very
Who do you
grey-
believe? What do you believe? Don't know. Don't have a view.
In
Just a humble
doubt,
mortgage broker.
In doubt, I do not put my cash in an offset, and I just put it in shares or leave
Somewhere else.
it in a cash earning account.
Yeah, and even then, you just get 2 or 3% on. It's pretty boring.
Yeah.
But still,
If you need to, yeah.
you just got to make sure what we're talking about here is ensuring the liquidity of your super fund.
Correct.
Right?
And
You
the
gotta be
issue
able to
comes
pay.
from that lenders don't actually have true offset. They have sub accounts, so it's not actually working as an offset. So
Yeah. There's always somewhere. This way, you need a
Complex
good mortgage
question.
broker to help you
Yeah,
out with this
yeah.
stuff. All right. So, so most people thought self-managed super funds were only for the wealthy.
yes, but no.
No.
Yeah, it's becoming
Like
very
middle Australia.
Yeah.
Now it's a more mainstream.
Yeah,
I think
yeah.
last time I looked, there was 600,000 or 700,000 super funds, self-managed super funds in Australia.
Would
Maybe
be-
1.2 million trustees. Probably those
Maybe
numbers
so
may
much
even be
more now.
outdated.
Yeah, it'd
that's
be
probably
a lot
outdated.
more.
So there's a lot.
We do so many of them
Yeah.
for
So you
very
reckon you're responsible alone for all of that?
part of it.
Hang on. How many super funds? There's 100 superannuation funds. Self-managed. 625,000 self-managed funds in Australia. What did I say about that?
Did you say 700,000?
I said somewhere between 600,000 and 700,000.
Yeah.
So 625,000 as of 1st June 2024, holding $990 billion in assets with over 1.1 million members. So I was pretty close. Pretty close. It's not bad going. Anyway,
Can do so much more though.
so if people want
Yeah.
more info about this, just call you up, work it
Yeah,
out.
call us up, book an appointment. We can guide you through it, connect you with the right professionals that can help there.
Can I book an appointment directly with Finni, or I've got to speak to someone first and to book the appointment, or can I
I
do
think
it
the
sort
best thing for people would be to check with a broker first that they can borrow money.
Yeah.
Because no point setting up an SMSF and then realize you can't do
So
the
someone
loan for the
contacts
property.
you or your team
Yep.
and go, I'm thinking about this. Tell me whether or not
I can borrow money. to buy a-
financially viable for me to
Yep.
borrow money, and you can work that out pretty quickly.
Yeah, can work that pretty quickly.
Yeah.
And then they would have to go and check with the accountant and financial planner that this is the right financial way for them to
Okay.
do whatever is needed. But we can check pretty quickly that they can do it with the lender and borrow money.
The best way to do that, just go to the Finni website.
Yeah.
Can you book direct online there?
You can book direct there.
So you can choose the time you want to
yeah,
chat to
you're just
someone.
like, I want to talk tomorrow at 4, and then I will.
And someone
will
there?
call you. Yeah.
Do you call up sometimes?
Yeah, I call people. Yeah.
Do you?
Yeah.
Speak to Eva. Can you actually say, I want to speak to Eva?
No.
No.
It's random allocation.
Yeah. Okay. That's finni.com.au. I highly encourage you. It's the best way to start. Just
Yep.
curiosity. Just
Yeah,
go,
just-
hey, look,
yeah.
me and my wife have been working for this long, blah, blah, blah. Hey, we're thinking about investing. You can go, yeah.
Really, the truth is, if you got 150 to 200, both partners working, you can go ahead. There would be some ways we can get you
To do
on.
it.
Yeah.
Okay, there's always a way. There's always a way with Finni.
There's always a way.
There's always a way. Thanks for coming in.
Thank you.
Always enjoy the chat. What are we going to talk about next time we get together?
I know. I'd like to actually hear from people of what they want to hear about. Any
Okay.
tips on what construction or
What's the best way to do that? Have you got an info?
yeah.
Yeah.
Email us at info@finni.com.au.
Yeah.
Tell us what you want to hear,
And
discuss.
we can do it. We'll talk about anything.
Can talk about anything.
Okay.
Yeah.
Let's do that. Well, thanks for tuning in. Thanks, Eva. Remember to check out smartpropertyinvestment.com.au. Heaps of stuff around super funds there. If you want to read up on it, go and check it out. Please keep the reviews coming. I was just looking before I come on air, all the reviews coming through. Thank you very much. Someone left a review there saying something about, it was 1 star, something about rocket analogies. I'd really like to get to the bottom of that. I don't think I've ever used a rocket analogy, but maybe I'm missing something. But editor at smartpropertyinvestment.com.au. If you let me know, I'd really want to break that down. But everyone else who's put reviews there are all very encouraging. It's great. One of them was how I sort of dissect what's going on in the world and what's going on with the economy, what's going on with Australia and all that sort of stuff, and giving analysis and interpretation of it. That seems to be resonating. So happy to do more of it, because that's what I try and work out. What does it all mean? How does this sort of shape my attitudes and strategy when it comes around investing in property? And it looks like the next sort of month or so is going to be quite entertaining with the election and what do we do about it. But more on that later. Thanks for tuning in. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.